Hi, good evening. Welcome to Headway Capital's presentation of why you should have commercial real estate in your investment portfolio. My name is Stephen Tagami. I am part of the investor relationship team in Headway Capital. I will be giving this presentation today. So thank you guys for joining. If you guys want these slides, please text me at 281-559-7061 if you want these slides. So you can text us. We'll get you these slides as soon as possible, and you can see everything we present here today. A quick disclaimer. This webinar is for educational purposes only and should not be considered legal or accounting advice or investment advice. The information in this webinar does not represent an offer to sell or solicitation of an offer to purchase an investment or security. Please consult with your own attorney, financial advisor, and CPA for legal matters, investments, and specific tax questions. Now, a little bit about our team here at Headway. We are led by our founder and CEO, Sid Shamin, who has started Headway Capital in 2018, has been running this business for 7 years now. He and his wife, Anon, who's our Director of Business Development, and Brian Alfaro has joined in on the team as of last year. He's been investing in real estate since about the same time, or commercial real estate about the same time, 2017 to 2018. I also, Stephen Tagami, have been investing in real estate since about 2019, commercial real estate since 2019, and am pleased to be on this team. I am an engineer by day and in the investor relation team at Headway Capital by night. Some of the values excuse me about that. Some of the values that we stand for at Headway Capital are transparency, integrity, lean operation, accountability, and invest first. By transparency, we mean that we want to make sure that you guys understand how we invest and what we're investing, and build trust and confidence with our investors. We believe in integrity, and that's working in an honest and ethical environment, and in our way of building and sourcing investments. We also believe in lean operation. That means that we spend as little as possible to maximize the returns to you as our investors, and provide the best service we can with our lean operations. And accountability. We take responsibility for our actions, and if things don't go right, we do our best to fix them as immediately as possible. And we also put our investors first. Our mission is to meet our investors' goals and make sure that you as the investor are well met and served. So the Headway difference, these are some of our properties, as you can see here, but we at Headway operate over $500 million of assets under management. We operate 3,300 units. We provide an average return of 25 to 30%, and we have 430 active passive investing partners. So let's get to the topic for today: why you should invest, why you should have commercial real estate in your investment portfolio. Let's see, let's go to the next slide and figure out. So here's a little rundown of the topics we will discuss today. First off, there's a historical outperformance of commercial real estate versus stocks. 2, it provides a great hedge against inflation. 3, it has great diversification in your investment portfolio. 4, there is low volatility, which means decreased risk in your portfolio. 5, there's capital appreciation in this investment. 6, cash flow. That means that the investment is providing money in quarterly investments or quarterly distributions. And finally, the tax benefits, which are only specific to real estate and similar investments. As for historic outperformance or performance of the commercial real estate versus the stock market, um, the as you see in this graph, the green line represents commercial real estate over the last 20-ish years. So if you were to invest $1 million, uh, that $1 million today, or as of 2022, would increase to 5.6 million dollars, whereas an investment in the S&P 500 would equal $3.2 million. Now, uh, a caveat to the S&P 500, that means that's dividends not reinvested, but still you can see a almost 2-to-1 investment increase of commercial real estate, and that is just commercial real estate across the board. That is not in our maybe specialized investments in multifamily investing. Uh, so one of the reasons that commercial real estate can outperform the S&P 500 is the ability for these investments to leverage, that is, use the bank's money to increase profits to the investors. Commercial real estate also provides a hedge against inflation. Now, the hedge is an inflation hedge because the rents can increase over time. It either marking the increase of inflation or better. So they uh, rarely reduce in price over time. The other reason that it's an inflation hedge, is that there's a limited supply of multifamily. I mean, basically, land is a finite resource. There's only so much land we can develop on, and as population grows, it drives an upward pressure on real estate over the long term. And then also the property value appreciation. The properties appreciate over time. So the value of real estate will increase because of, again, limited supply and the ability to raise rents over time. Um, this is also the other thing about real estate, is that it's a tangible asset. It's a physical asset with real value. It's not like a stock or bond, which is a piece of paper representing ownership. When you buy into commercial real estate, you actually own a physical property, a piece of land, and a building. Now, if you look at this graph, it kind of marks down the different asset classes within commercial real estate, from the strongest to the weakest, um, in terms of how they hedge against inflation. So as you can see here, multifamily is typically the strongest hedge against inflation. And that's one reason because of that, is because people actually need a place to live. Um, they might not need these other commercial real estate assets, but everybody needs a place to live. So that is why multifamily is one of the strongest hedges against inflation. The next reason you should have commercial real estate in your portfolio is diversification. And with investing in with partners like us or other investment partners, you get diversification without the work. Now, we know that uh, real estate is a source of it's an investment that is different than stocks and bonds, which is adds to your diversification in your portfolio. But investing um, in a syndication or a with general partners like us, you will have greater diversification in your portfolio without the work. Now, there is a difference. You might say, hey, I have real estate in my portfolio as a REIT. Well, there is a difference between being a limited partner or investing in a direct property than a REIT. So number one, REITs have stock. They're just like stocks, and they have prices that are marked in the market, and they can be almost just as volatile as a stock. And they don't really uh, represent the underlying value of the properties they own. So the other, I guess maybe it's good and bad though. Uh, REITs are portfolio properties, which gives you great diversification, but that also means that the REIT has to buy properties that might not be the best value for the money because they have to maintain the value of their portfolio. They have to invest money that is given to them. And so they might not always be specifically getting the best properties. They're just adding properties to their portfolio so they can own them. So the returns might not be the best in a REIT. Next, we'll go over uh, volatility for commercial real estate versus stocks and bonds. So here in this graph, you can see that the difference between volatility between commercial real estate, which is in green, versus the S&P 500, which is in orange. You can see these swings of 12, I don't know, 12, 14% up here. So 12 to 14% swings in the S&P 500, whereas commercial real estate is swinging between uh, maybe 1 to 2% per quarter, quarter change. So you can see the difference in values are a lot less. Differential changes a lot less in commercial real estate, and that gives you uh, I guess, a less. You'll have less, I guess, anxiety over changes in prices. Now, I'm not sure if you guys have, yeah, well, I'm sorry. You probably do have stocks and bonds in your portfolio, and you might check your stocks every day. And like today, I think the stock market was down. I'm not sure. I know it was down, but I'm not sure how much. Well, you don't really have to look at your commercial real estate day to day. You will get quarterly reports, but it's not a day to day value and analyzation. Let's see. Next is capital appreciation. Okay. Uh, by buying in growth markets, your commercial real estate will increase in value. I mean, it's a simple supply and demand curve, right? The more people want to buy your real estate, the higher the price will go. So over time, commercial real estate will appreciate. And especially if you're buying distressed or discounted property, uh, like in today's market right now, we are in a market of high interest rates. There are properties that cannot meet their debt obligations, and there are, I guess, what we might say, properties on sale right now to buy, in which people like Headway Capital can capitalize on great deals to buy properties at low market prices. On top of that, there's other ways to increase capital appreciation by putting in capital improvements, by making the property better and raising rents that will cause capital appreciation for a property. And along with that is, like I said earlier, market timing and being able to buy properties at good prices. I mean, I know there is a idea that we shouldn't time the market, but when the market is good, we should probably look at, buying when things are priced low and looking to sell high. I mean, that is a basic of market economics. Now, timing for the lowest is difficult to do, or selling at the highest is difficult to do. But we know right now we are in a low point. A lot of the cap rates or the value of properties are going down, or are down right now. So buying in the current market is a great time. And looking forward to the future, these prices should rise over time as interest rates and other factors change. The value of properties will go up. Let's see, next slide. Next is cash flow. Cash flow can also be called mailbox money. That is a term that you might hear fairly often in the commercial real estate space. I also would like to reiterate last week, Brian Alfaro gave a great talk last week about cash flow or cash on cash returns. So if you would like to see last week's webinar, please contact us on that. And actually, one other thing I'd like to mention is if you have any questions about any of these slides right now, please put those in the chat and we'll address them at the end of the webinar. Um, Anyways, back to mailbox money. That means that, with most commercial real estate, you will get distributions if it's cash flowing. That means if it's making money. And these this cash flow can usually yield about 5% a year. And it gets sent to you in either a check by check or an ACH and straight into your banking account. I mean, it really becomes truly passive investing. There's nothing more passive than investing in commercial real estate. Um, I guess an example of this is if on a typical 5% yield on 100K investment, that's about $400 a month. Now, with that $400 a month, I mean, that's not a huge sum of money, but you can think of that as money that you can do things with. So $400 might be, I don't know, maybe a staycation in your local neighborhood, or maybe getting a couple massages for you and a loved one, or maybe paying for a maid service, or little things that could help your family out so that you have more time to do things that you want to do. That is the great part about cash flow and about commercial real estate investing. It is very difficult to, well, I guess I'm going to say very difficult, but in stock investing, you might get dividends in some of your stocks. But if you ask yourself, how many times have you actually pulled out those dividends to use them today? You generally probably leave them in your bank account or in your stock market account. So I think in commercial real estate, you get these straight to your bank account. You're pulling money out of the system so that you can spend it the way you want to do, but the way you want to. You can always reinvest that money, but still you have that money in your pocket, which is very, very convenient. Next, we have the tax benefits that is fairly unique to uh, real estate. So with depreciation and capital depreciation and capital expenditures, which are applied to a K1 statement, which is a tax statement, you'll usually get a loss on a property, and that's just a paper loss. The value of the asset will not go, it does not go down based on the depreciation and capital expenditures. Those are just ways um, that real estate has advantages over other investments. And those become deductions straight to you. Um, and those passive losses can be used against either current year's passive gains, uh, i.e., the cash flow that you earned that year, or it can be carried forward against future passive gains. That could be another property bought and sold. You can use the deductions and from one property onto another property onto the sales of another property. Now, again, talk to your CPA, talk to your tax advisor. Everybody's situation is a little different, so make sure you talk to them. But really, there's great benefits to owning um, commercial real estate and through tax benefits. I mean, really, the whole well, I want to say the whole reason. One of the biggest reasons here of owning anything is to make money, and taxes uh, can be up to, well, actually up to 50% of your income. So really, half of what you're earning could be going to taxes. When we look at real estate, you can get huge deductions off that tax bill. Next, I'd like to talk about the challenges of owning commercial real estate. It's not all roses, but there are these challenges we look at uh, we understand that they exist, and we do our best to mitigate these issues. So first off, low liquidity. Once you buy a real estate property, you're in it till the end, right? There's not really a way to sell out of it. Maybe some partners might allow you to sell if there's some situations in your um, uh, personal life, but really, once you invest your money, you're in it for the life of the deal, which could be 3 to 5 to 7 years. It depends on what the deal is. So really watch out to invest money that you don't need today. You're really looking for uh, getting that money back at the end of the investment. Uh, Next is market dynamics and economic factors. It can be challenging if you're investing in a quote unquote hot market in which things are priced very high. Um, uh, you know, we go through market cycles. If you are buying high and it's, excuse me, and there are factors that like raising interest rates, decrease growth in that area, that could cause the value of the property to decrease. Now, a good syndicator will look into these issues and factors and try and forecast which way things are going. We're not always right, but we do our best to try and mitigate those challenges and try and underwrite so that if factors come up, look for worst case scenarios to make sure that the property will survive and be able to, or sorry, not just survive, but be able to make sure that the investment survives through these economic challenges. Make sure that the property cash flows through these challenges. Uh, Next is trying to find the right property. There are a lot of properties for sale. Not all of them fit the buy box that you or your your investment group or syndicator wants to invest in. So just make sure that, if a deal is put in front of you, make sure that it meets the right criteria for you and is an opportunity for you to buy. And next, maybe is managing the commercial property. Now, that's not a challenge for you as the limited partner, but it is a challenge for the operating or syndicator. So it is something that we look for, and here at Headway, we actually have our own in-house management company, so we have complete control over how we run our properties and who runs them. So just something to look out for. It's not always easy managing a property, and here at Headway, we do our best to make sure our tenants are happy and make sure that the properties are up to par in how we operate them. So, quick rundown of what we just discussed here. Number one, uh, remember, one of the huge reasons of investing is just the outperformance of commercial real estate versus any other asset. Um, it really does outperform everything else in terms of returns. Number two, uh, the diversification in your portfolio. Uh, I wouldn't say own 100% outright real estate, but it is a investment vehicle that should be in your investment portfolio. Um, and then it also is a hedge against inflation, like we discussed earlier. So maybe your stock portfolio has hit maybe in the last couple of years it might have gone down quite a bit. Uh, Commercial real estate has stayed pretty stable over that time. Um, and then also the lower volatility, just like we said earlier, where uh, hedging against inflation and um, not changing in value that much. Uh, and also the lower risk than stocks, right? Again, when we're talking about multifamily properties, there's always a need for somebody to live somewhere, and that is in an apartment. Now, if the market goes kind of sideways in terms of people losing their houses or not, um, we're in an adverse recession time. Uh, once if people lose their houses, they will ultimately end up probably having to rent, and they ultimately might rent in an apartment. So uh, we feel that apartment investing is low risk and has low volatility. Uh, Next are the cash flow opportunities and capital appreciation. Uh, so you get both of best world of both the best worlds. Number one, cash flow, which is money in a quarterly distribution, and at the end, when the property sells, the property you get the value of the property at sale. And last is the tax benefits. Um, there are huge, like we discussed earlier, huge tax benefits to commercial real estate through depreciation and capital expenditure losses that you can capitalize uh, on as an investor. So, what's next? We at Headway have many passive investing opportunities. One, we invest in distressed apartments, multifamily, which we've discussed earlier all through this presentation. The second is a real estate income fund, which I will discuss a little bit later in a couple slides, and then a car wash opportunity through our operating partners, buying car washes to for yield and appreciation, similar to that of multifamily. Uh, I'm sorry, I got to go through slides here. Give me a second here. So these are the passive investment opportunities, the distressed multifamily, the real estate income fund, and the car washes. So how do you invest with Headway Capital? First is through a call. So give us a call. We'll set up a call at a time to discuss with me or one of the partners and or uh, investor relationship team members. And then second, we'll make sure you qualify to meet the income or net worth requirements. Third, we'll accept you into our private investor group, and you will get the next upcoming events offered by Headway Capital. And then fourth, you can review our investments and see if they meet your investment goals. Fifth, you receive acceptance of your investment if you qualify, and you can complete all our investment documentation. And then seventh, sixth, you will be receive our welcome packet and added to our private investor porthole to track your investments. So if you're interested in investing with our private investor club, please copy this QR code and we will get back to you as soon as possible and we'll set up a date to talk. Now back to that uh, income fund. Um, so we here at Headway, we have a income fund which invests in we do hard money lending for single family houses uh, in which you can earn a annualized return of 6, 8, 9, 10%, depending on how much you invest. So on a typical $100,000 investment, you would earn 8% on your money. That would be like we go. So that would be um, cash and cash return or cash flow just per year. There's no that's just straight up per year with no appreciation at the end, but still 8% per year. And if you would like to invest in this fund, which is always open, you can click on this QR code to get more information and information on investing in the fund. Whoops. So questions, if you guys, let's see, let's check the chat box for Q&A. Uh, Sorry, before we answer those questions, let's I just want to remind you guys, if you want these slides, text us at 281-559-7061, and we will send you these slides. So first question, what is the minimum investment required to start investing in commercial real estate? So as a this well, as a passive investor, which I think this question is asking, as a passive investor or a LP, a limited partner, um, usually the minimum investment is $100,000. Sometimes you might find investments as in lower at 50,000 or 75, but typically it's $100,000. Next, how does the economic cycle affect commercial real estate investing? That is a good question. So again, as we discussed earlier, there is an economic cycle. Real estate does follow, I guess, when things get hot, it goes up, and when it goes down, it goes down, but not as the volatility or the rate of change is a lot less than stocks or other investments. So it is affected, but it is also relatively stable compared to those other assets. Next question is, what are the typical returns I can expect from commercial real estate? So uh, this is I guess, kind of a difficult question, but really, it is what we project on our investments is a over a 3 to 5 year period, 100% return on your investment. That those are the investments that we're looking for, and that's what we strive to give to our investors. That might change based on investment to investment, but that is the goal of our investment criteria. Next question is, how do I handle the management of commercial property if I'm a passive investor? Well, I guess that's a kind of a two-part question. If for the property itself, there is there is zero management on your part. You don't have to do anything. You don't have to deal with the tenants. You don't have to, you'll never interface anybody on the property, which is the best part. Now, you do have to manage your investment by watching how the investment performs by looking at quarterly or monthly statements, and making sure that it performs to your desire, and express what you think, how you want that investment to perform over time to your lead investor or your syndicator. Next question. How liquid is a commercial real estate investment? So as we discussed before, it is not liquid, not very liquid, I should say. Typically, again, depending on the property and what's being bought, it's usually a 3 to 5 to 7 year hold period. So you will not be able to touch your money that you invest for 3 to 5 to 7 years. So you're really looking at long-term investing. This is not, this is not the stock market, which you can trade day to day. It is long-term investing, but that long-term investment, you will get a typical higher rate of return on that investment. I think that's really the last question. Really want to thank all of you for joining us. I really appreciate your time. If you want to contact us, our website is www.headwayinvestment.com, or you can email us at investor@headwaycapital.us. Again, really appreciate your time. I hope you guys learned a lot. I really enjoyed being here with you guys today, and have a good night. Thank you. Bye.